All right, how's everybody doing? Welcome, welcome, welcome. How's everyone doing here this afternoon? Yo, what's up, Herschel? How you doing? Nice little training day here today. We got lots of people in here yet. How we doing? We got 5 of us. How's everyone doing? Everyone doing well? Love to hear that, man. Love to hear that. Good. So let's kick things off, right? Who's got the first question? Who wants to get things started here? What do we got? This only works if we're interactive here, team. Anyone? Anything? Yeah, I mean, there were a couple, here today, right? Especially to the downside on these early moves. So, like, the easy example here is from 944, right? So, this is our high volume breakout through low of day. So, if we were to go back and replay it, right? This is what the chart looked like at the time. So, our setup here, breakout through low of day, break, close, and hold under low of day on increasing outlier volume. And so we had active setup trigger, right? Confirmed on volume and candle shape, right? And closing under those lows. And so we had, really good opportunity. What then happened, right, on the next candle? So if I were to play the next one here, go back. Right. What I generally want to see from a price action perspective, right, is the ability to basically get a little bit of a fake out. And kind of tough to zoom in, but this little top wick, really hard for us to view that as a fake out, right? If the open of that candle was 168.25 and then the high is 172.75, just really hard to trust that, and then price just continually just flushed lower, right, for the remainder of that next 2 minutes, right, moving 60 odd points, right, or 30 points a minute, and just never pulled back into our entry zone. So when we're looking to map out a trade and we're putting our stop loss at the low, we then even put our reference price, right, to be 10 points away. It was away from our reference price within 15 seconds and then just never had an opportunity to pull back. So this trade satisfied our setup criteria. It satisfied our confirmation criteria. But then what we were looking for from a risk management perspective, right, i.e. getting our entry with the risk that we were comfortable with, the train just took off before we ever had a chance to jump on. I got 2 mics again? All right, is that better? I don't know why that happens. That's annoying as hell. I only have 1 mic in front of me. I don't get how that works, but appreciate that. I'm glad we could get that knocked out on question number 1 instead of 55 minutes later. So just kind of one of those trades, right? Everything lined up, and just execution-wise, never quite gave us that final little bit of confidence where we could pull in and find our entry. It happens. Annoying, but it happens. Make sense, Herschel? Good, good. What else we got here, team? Any other questions? Try to stack up a couple of them here. I'm just going to open my my door to the patio. 1 sec. All right, what do we got? What else we got here on the docket this afternoon? Yeah, I think I got to start, I got to bring in some eye candy on here for you guys to start asking questions. If Salma Hayek was running the stream, I reckon we'd get a lot of questions asked on a daily basis. Come on, who's got something for me here? Who's got something? So the reversal thesis from later? Next week? I don't know if it's possible in the next week. I also, I don't like, yeah, I don't like those types of things, because what I've learned, I would say, right, is markets can stay irrational longer than we can stay solvent, right? So, you know, when things squeeze, and when there's like a little bit of a market bubble, I'm not quite sure we're there. Yeah, like it can go higher than we expect, and it can happen faster than we think. So I'm always a little bit skeptical to want to like say, yes, 30K or 35,000 or whatever is going to happen by X date. I'll let my long-term portfolio just be happy if it does. What I would say is markets often like to move in a direction that causes the most amount of pain for people, right? Sounds terrible, but if there's a lot of people shorting at all-time highs and we keep getting positive news and we see, you know, the US open up more investment to China, or we see the Strait of Hormuz get unblocked, or I don't know, whatever cajillion things could happen. You know, there's always going to be people fading that rally, and at all-time highs that can ultimately become very, very expensive. So for it to move 500 points in the next couple days, I mean, absolutely could happen. 100 points a day for the next week certainly wouldn't be unsurprising, a net 100 points. But I'm not going to box myself into a corner and think that it's inevitable. In reality, I want to more react to the price action, not try to predict it, if that makes sense. Yeah, so let's go over the reversal scenario, right? The one that we played, basically the low of the day, right? So we had a really good idea of that setup trigger. And it was effectively here, this 948 candle. So we need two things to create an active reversal setup, right? One, we need to see price action be reasonably extended away from the opening range. And then we need to see a failed breakout to the downside if we're looking at a bullish scenario. So here at this 948 candle, we touched the 2R level on the opening range. So we moved 142 points away from the opening range low, right? Down towards that red line, and we touched it. So we had seen a good separation, right, away from the opening range. And then if we look at it, right, good volume here, good volume here. So why couldn't bears sustain that move, right? If bears were so strong and they actually had the enthusiasm that we were indicating, this breakout wouldn't have failed. So we have that setup trigger. The confirmation then came in as a resounding yes, because it was second biggest volume of the day, bigger volume than any of the selling pressure we had seen on that breakdown. So we had a lot of confidence that bulls were now in control, right? We had bears losing in their attempt to keep pushing lower, or they couldn't sustain those lower moves. And then we saw bulls recover on a larger volume or more bulls than the bears that we saw previously. So that then in context, right, that 946 kind of ends up looking like a capitulation candle, almost like the last huff and puff before you collapse at the finish line. And then bulls took advantage of that momentum and were able to control price action for the remainder of the day. We then played that thesis, right, multiple ways here to the upside. So we tried to play it a couple times here inside this range. Once we saw that sort of next period of consolidation, sort of in like the 10 to 10:30 time frame, we knew we kind of had to sit on hands. And then we looked for that initial breakout here back up above 223. And then finally, we played that breakout here at like 10:52, that kind of 11 o'clock range, where we continued on that thesis. So this candle here, right, that 948 was ultimately the most important candle of the day from our setup's perspective. And I think we did a pretty good job taking advantage of that upside momentum once we saw the failed breakout after the extended move. I appreciate that, Andrew. Now let me flip the script here a little bit, right? If I were to ask you guys what you think is the biggest bottleneck currently in your trading, what would you say that is? So we'll turn this into maybe a little Q&A or something here. All right, so seems like we have a pretty common theme here, right? Most people are like the phrase I would use, right, is they trust that their losers will become winners and that their winners will become losers, right? And so once they're in a winning position, correct me if I'm wrong here, right? Once you're in a winning position, you start to get nervous or panic or worry. I'm going to give away all these hard-earned gains and be back to square one. Is that kind of like the general sensation? Maybe you haven't quite like vocalized that idea exactly in your head, but is that sort of the general idea? There's like a fear that the move will stop working type thing. Yeah, and I think this is a really classic. This is a very classic trader trope. I mean, I deal with it all the time too. The difference, I would say, right, is that we talked about this a little bit yesterday, but I don't need to believe every thought I have, right? So most of the thoughts I have during a trading day aren't designed to make me more money. They're designed to alleviate anxiety, right? So anxiety in trading, happens, based on like a P&L trigger. So you're fearful that your win is going to become a loss, right? You're going to give away that profit, or you don't want to accept the loss because you want it to be a win. And so averaging down or ignoring your stop loss or whatever it is kind of allows you to push aside that anxiety or delay it and ultimately, right, generally lose more money. In my experience, what I like to do here is basically reset my confirmation principles. So why not repeat basically the skills and the patterns that I already have in my trading? Good example here, right? So if I'm looking, let's say I played this reversal here at 948 and I jumped in perfectly, right? Amazing entry at 103 or something like that, and was playing this to the upside. And something about this candle didn't make me feel very enthusiastic about the quality of my trade. So I'm in that position. I'm up, let's say $1,000. And now I'm worried, oh, fuck, like I can't give away this money. What do I do? Well, most people in that situation, right? I think this is where a lot of people struggle, is they get that sensation or they get that feeling. And then to alleviate that anxiety, they immediately click close. Where if they felt that anxiety in a losing position, they'd probably wait to see if it became a winner, right? Or if they could like finesse something to turn it into a win. So that's something that we want to avoid, right? The way that you do that is you then basically reset your confirmation principles. So let's go through all three of these candles because I think these are good ones for this example. So this candle, right? I'm in my trade. Okay, it looks something like this. Stop loss 91. Let's say entry was 101 just to keep the 10 points. Could be a little bit higher, but let's say this, right? So now I'm in this trade and I'm thinking, okay, something about this is making me feel nervous. Something about this is making me feel anxious. Let me counter that feeling with a fact. And the fact that I like to rely on is basically resetting it to be a confirmation standard. So what do we look at for confirmation? We want to see a strong candle shape. We want to see strong volume, and we want it to hold higher highs or hold lower lows. So those then become the three things that I'm judging that price action on. Does the candle give me a strong shape? That 950? No, right? I wouldn't say that's a very strong shape. Is that volume increasing relative to the previous candle? No, probably not. Are we holding higher highs? Yes. Okay. Well, in this situation, right, maybe I wouldn't have that anxiety because I'm up 45 points. So maybe I'm not super fearful that this trade is going to go against me. And so I have no reason to panic. Next candle, right, gives me 2 out of 3 things. It hold higher high, so it closed above 168. It's a strong candle shape, but it's pretty pathetic volume. So again, I got more information that tells me my idea is strong than weak. And so objectively, I should still be confident that my trade is in play. And then finally, right, this third candle, it's got basically an arrow pointing down, right? If I were to draw an arrow here, right, it looks like it's pointing that way. It's not pointing up. So A, that's definitely working against it. B, it's got a lot of increasing volume, but we know a lot of that volume is going to be people rejecting it basically at 225. And then it's barely holding higher highs, but not particularly on a strong shape. So at this point, right, this candle would objectively tell me that my idea is probably running out of momentum or running out of juice, and I have no reason to hold on to that position. And just like confirmation, right, I only know this info or only have that idea once this previous candle closes, right? So I don't know what this 950 candle is going to close like until 952 happens, right? When the candle closes. So I have to basically delay my execution until I have those facts. So those feelings, sensing them, most people use that as a trigger to get out of their winning positions, when in fact, it's just your brain telling you that you need more information. So the only way you're going to get that more information is delaying that decision for 30 seconds or 45 seconds or a minute and waiting to see objectively if the price action is giving you the reaction that you want. If it isn't, sweet, you get out, and you're probably in the same spot you were at the first time you felt that feeling. And best case scenario, right, you made an extra 20, 30, 40, 50 points, and you delayed making a very aggressive decision. So when in doubt, go back to the skills that you already have in your trading. Basically repeat the techniques that you're familiar with so that you're not confusing yourself on what to do and when to do it. And I hope this doesn't, come off as being like a little bit of an asshole, but all of us have the willpower to be able to wait 2 minutes, right? Like ask your partner, right? 2 minutes isn't a very long time. So I think we can all find an ability to delay that gratification, to fight our feelings with facts, and to, systemize that process. Now, there are going to be times where I'm waiting for that candle to close and I get stopped out. There are going to be times where I get a perfect 3-for-3 candle close and then, it shakes me out in the next candle. All these things are going to happen. And they are certainly inevitable to a certain extent, because no matter what technique we try to use, we're solving for like 60%, 70%, right? Nothing is going to work 100% of the time. So we're not expecting ourselves to be perfect. All we're trying to do here is give ourselves a repeatable process that we can study and learn from. So if I'm, if on every trade, I make my exit decision only after the candle is closed and it's clearly not working, well, it'll be super obvious, right? Because I do the same thing every single time. And because I do the same thing every single time, I don't have to fix 20 different variables. I only need to fix one thing. And so then when I do make a change to my trading, or I do make an improvement, or my technique gets better, I don't have to guess on what I have to change. I know for certain, okay, I only got to tweak one thing. And so I deal with less noise. So it's kind of like a form of delayed gratification where I'm not 100% confident that this is going to be the best thing for me. But I also know that if I only react to my emotions each time, that doesn't create a repeatable pattern that I can study and learn from. So what we're trying to do there is to create that structure, or to create that rhythm and routine, so that when we do review our trading and we do our homework and we study our decisions, we can look back at it and say, okay, objectively, this was telling me I should stay in, or objectively, this was telling me I should stay out. And then we can adjust our technique to better reflect the facts that the market is presenting us. Does that kind of make sense? And then if we were, to leave the leave that view, right? We see after this candle that showed me that weakness, price action pulled back, right? And you would have been able to avoid all that drawdown, all that unnecessary stress, all that anxiety. And even if you close right at that candle close, you're almost topping it, right? You're getting it within 30 points of whatever the high of that move is. That's a pretty awesome result when you've caught 150 points. What else we got here? Team, any other questions? That's a good one. Yeah, it's our signal candle, if you want to call it that, right? Until proven otherwise. Two things that create a proven otherwise, right? So a break, close, and hold under the low of that, right? So if we got a breakout under 29,075 and we held it, doesn't matter what the volume looks like, that tells me that my idea is no longer correct. Or let's say that, this candle, or I'd say the red candle, right? So let's say this candle or this candle or this candle was bigger volume than the 948. That would also indicate a change in control. So it's like, I'm sure you guys have heard me say this, but markets behave like they always have until proven otherwise. So if we just define what that proven otherwise looks like, then we can, trade our signal for a multiple of opportunities. And the reality here too, right, is if a trade is strong, it'll give you more than one chance to enter. So I don't need to reset on each trade or each entry, especially if I'm keeping my risk really, really tight. I can focus on just trying to get the best risk reward entry I can and playing that numbers game. And to be honest with you, Herschel, that part of the trading, and I don't mean to contradict myself, right? But that's kind of like the art, right? So your setup and your confirmation is the science. Your execution is where you get to be Picasso for a day, right? Where you get to be an artist. So, your execution, you're trying to find creative solutions to your entry. Now, creativity still needs guardrails, right? Or it still needs, basically lanes to behave within. So we're not like randomly placing stop losses or randomly finding entry triggers or whatever it might be. We want to still be consistent with that process, but our execution is where we have the most flexibility with our process, if that makes sense. So as long as my idea has not been invalidated, I have the flexibility to continue to trade my thesis. And it doesn't really matter if it's 5 minutes or 50 minutes later. Like we can see here, right? Market went up for the remainder of the day. And an entry here is a good entry, an entry here is a good entry, an entry here is a good entry, right? And it's all building off of that initial signal that was generated, 15 minutes into market open. And I think oftentimes that can be what's confusing about trading to a certain extent, because every trade is a little bit different, right? They all have like their own little personality quirks and their own personality traits. So you kind of have to understand like the core foundational skills, and then then you have like the brain power to see the differences between them, if that makes sense. Good question. What else we got here? I appreciate that, Marty. Thank you. Anything else here, team? Any other questions? Give me a time here, Herschel. What time you talking? So like this time here, 9 or 10:52. So like 11:30, 12 o'clock, that kind of time. Yeah, so at 12, like it's a binary, right? So we got to zoom in here quite a bit. But like if I'm playing the breakout here, do I have increasing volume? Yes. Is it outlier? Yes, right? That would be the standard for me. Increasing outlier is a binary. That's enough, right? So different times of day, different periods of the market are going to have different volume profiles. You're always going to expect the most amount of volume at the open and the most amount of volume at the close. Everything else in between is a little bit funkier, but that's why we have the increasing outlier standard. If it's more than average, amazing. If it's less than average, no bueno. So again, we turn that process into the science, right? That's the same thing every single time. Increasing outlier doesn't mean it has to be a 5,000 contracts traded. It could mean 2,000 contracts traded, right? It's all relative to average. And so I don't have to then ask myself, oh, is this enough? I can be a smooth-brained ape and just say, price more, white line, yes, right? Like I can be really simple then in my thought process and not create like analysis paralysis for myself. Like so much of what we're trying to do here on a daily basis and in trading in general is to create simple frameworks for decisions that don't require much brain power, right? Because we want to maintain as much of our mental capital as possible for our artistic creativity, right? For our execution, for how we manage our trade, for how we maintain that discipline when we're in those high dopamine events. And so the simpler we can keep our process, the more repeatable it becomes. When something becomes repeatable and you put enough reps in, it becomes muscle memory. And when things become muscle memory, you stop thinking and you start doing. And when you start doing instead of thinking, you start your trades outside of your own head, right? Where you're not thinking, is XYZ going to happen? Is this going to happen? Oh, am I going to be able to pay my bills? Is my wife going to love me? Like, I don't know, whatever intrusive thought we have. Those are weird examples, but that's the whole objective there, right? How can we make this process as simple as possible so I can react to the price action in front of me, not like try to big brain it? Because like, yeah, and we've all experienced this, right? We've all talked about this. When we think that we know more than the market, the market generally proves us wrong, right? Like we've all experienced it. How many times have you closed a trade early because you thought it was going to go away and then 30 seconds later it's up 45 points, right? And so we want to avoid those scenarios where we like box ourselves into a situation where we're damned if we do, damned if we don't. And that's much easier to do if you start your trades or you start your process from like a baseline of skills. How do you guys like this earlier time slot? This work for people? Except we're gonna try to do whatchamacallit, we're gonna try to do one call or two calls kind of like right after market close, like today, and then two calls in the evenings to kind of make sure that we have a reasonable spread so that as many people can watch as possible. Can you use Trade Copia with our prop firm? I can't honestly make any recommendations to any third-party tools for two reasons. One, I don't have the ability to maintain those tools. And two, if I start to offer official support to them, I'm going to be flooded with requests for things that I can't control, right? With the Volumetrica platform, there is an internal trade copier that's built in, and it works really, really well. I've not had many complaints from people at all, really, about it, or at least none that I can recall off the top of my head. So, I wouldn't complicate your execution. The other thing you want to be aware of here in general is that a lot of these prop firm companies will share data with each other. A lot of them are created by, there's like three white label providers that exist in the space, and they own something like 90% of the prop firm space, right? All three of those companies combined. Generally, what they're trying to avoid is basically hedging, right? So if you're hedging in one account that's been launched by one white label, and then you open up an account to another prop firm that's owned by the same white label, they're going to be sharing data amongst each other, and they will potentially ban you or deny you payouts based on your trade copier. So those third-party trade copiers can oftentimes seem like a really, really good idea, but when it then actually comes down to getting paid, it can complicate things significantly, as you will be in breach of their terms and services, and they will have a data or information advantage over you, and you'll be kind of shit out of luck. So, yeah, like I mean, I say this a lot to everyone here. If 5 accounts isn't enough, you're probably doing something wrong, right? Like, having 650 grand to trade with. All right, that's the math, right? Yeah. No, 750 grand. Well, I can't do math right now. 650. All right. Yeah. Sorry, long day. If that isn't enough with 20-to-1 leverage, meaning you've got buying power of like more than $1.2 million, like if that doesn't cover your bills or can't cover your bills, you probably have a spending problem, not a trading problem. The other thing that I would recommend, right, is take your first 10 grand, 20 grand, however much you make from prop firms, and fund your own personal account. Use prop firms to speed up the growth of your personal and remove the red tape around your trading. That would ultimately be the primary focus. Prop firms are really good because they allow you to create a proof of concept that your technique works, that you know how to make money, that you know how to do X, Y, Z. But the sooner your profits are paid for by the market, not by someone else's evaluation fees, the easier life becomes. What else we got here, team? Any other questions? I would be very careful in connecting your prop firm to your personal, Herschel. The main reason is when these copiers malfunction, and they will, it's inevitable, they will liquidate your account, right? And it's not like the trade copier will do it, but you'll have a position open that you didn't expect, or maybe you're net short when you wanted to be net long, or whatever it might be. And leaving your personal account liable to a software that costs you, $99 or $297 or whatever it might be is a really bad risk reward equation. Like, the risk of blowing your account, your personal account, is a big deal. If a trade copier malfunctions and you're on a prop firm account, okay, worst case Ontario, you're out, $1,500 or something like that. You haven't lost $100,000. So I would be very careful doing that. When I was trading props very aggressively prior to launching day trader funding, I never connected my personal account to my trade copier for that exact reason. Because you're going to go tell them, hey, John at Trade Copia, your software malfunctioned and I lost $20,000 of my personal funds. And they're going to laugh at you and say, hey, did you not read our terms and services? And it would be very careful. I'd be very careful to commit to that. Yeah, Marty, like my base recommendation is do not connect your personal account to a trade copier. Just, it's not worth it. The risks outweigh the benefits significantly. It would be better to only trade your personal than to trade personal and prop in a copier. You have much less risk. And like, software not working, it happens at every single level, right? At least if, let's say a broker malfunctions, right, and it liquidates your account for whatever reason, they are insured and they are regulated, and you will get your money back. Yeah, I mean, depend, like, find your flow there. There isn't like a right or wrong answer, Herschel. Everyone's going to have a different execution process that keeps it simple. But like I said, if you fund your personal account with $20,000, you will have as much buying power as you would with 5 prop accounts. And your execution will be simpler. You won't ever have to beg for your money. And every dollar you earn will be coming from the market. So, like, the recommendation I used to give to people is make your first $100,000 trading prop and then put that money into a live account and scale that up to whatever number you want. These days, because the PDT rule is changing and the margin requirements are changing, you don't need nearly as much. What else we got here, team? Any other questions? like ultimately we're all here adults. We can make our own decisions. But yeah, my personal stance is like I would not want to put my personal money, attach it to a copier that's, whatever XYZ. I've seen too many too many problems to trust them. Yeah, I'm gonna go final call for questions here, team. Final call for questions. No, my pleasure, Troy. For a few of you here, guys, today, a lot of people had their trading accounts like halted for whatever reason. What happened last night is there was an API change from the provider that we use, from DX Trade, the brokerage company, I guess. And they didn't update their API docs until this morning. So we're working through updating everyone's API connections to make sure that their accounts and their balances are all currently restored. At the moment, approximately 20, maybe 25% of accounts have been ported over to that new connection. And I would imagine that the remainder here will be done within the next couple hours. So I do apologize for that inconvenience. And we are working on getting that resolved for everyone here as soon as possible. That will mean that activations, resets, your resets that you have in your accounts will all be activated and working. And truth be told, pretty freaking furious that they didn't give me any heads up that they were going to be making those changes. So I do apologize, but hopefully that means that we have a very stable platform here going forward. Who knew that being a developer was a huge pain in the ass? If only I knew. It never ends, Marty. Absolutely. I look like a raccoon right now. It's not great. Yeah, so FPX Technologies number one, or maybe not number one, but they're the US based one. Prop Account's another one. The other company is called Your Prop Firm. And then Match Trade and Leverate are about the same. And with all those companies, you can start a prop firm for like $5,000. And then they charge you like 60 grand a month in management fees. So these businesses are good businesses. They know how to take advantage of dumb influencers. We appreciate that, Theo. Thank you very much. Glad you could join us. And gracias, Jorge. This white boy's been speaking a little bit of Spanish since Cinco de Mayo. I got a couple burritos in me, and all of a sudden, I think I'm a big booty Latina. So I live in Canada, right? Well, but you do not get good Mexican food the second you cross the border. So, being down in Vegas, oh my gosh, the Mexican food is so good. Oh, someone, first time I went, they told me to go to Tacos El Gordo. I don't know if that person's in here today, but I waited for like 35 minutes in line on Cinco de Mayo, and it was so good. Oh, like I might have to move to the States just for that reason alone. Oh, I love Mexican food. All right, team. Final call here. Give you a quick 30 seconds. Any other questions? And then I think it'll be time for a little nap. All right, team. Well, if no further questions, then I'm going to kill it here for the day. Same deal like always, right? If you have any questions or any tech issues, please email. We'll be taking care of looking at things here for the remainder of the afternoon/evening. We'll do our very best to make sure that everyone is restored and active and tradable here for tomorrow. Apologies for any of the tech issues you may be experienced here today, but we will get them resolved as soon as possible. In the meantime, let's have ourselves a fantastic trading day here tomorrow. Let's see if the market wants to keep squeezing for us and give us some nice wins. But we'll stick to our process, we'll stick to our rules, and we're focused on getting just a little bit better every single day. So hope you have yourselves all a fantastic rest of the afternoon, and I'm really looking forward to trading with you all tomorrow morning, where we hopefully crush it again. Talk soon.